Ladies and gentlemen, good day and welcome to KDDL Ltd. Q4 and FY’25 earnings conference call. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance in the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Yashovardhan Sabu, Chairman and Managing Director. Thank you, and over to you, Mr. Sabu.
Thank you, and good morning, everyone. Many thanks for joining us on the KDDL Ltd. Q4 and FY’25 earnings conference call. I hope you've had the opportunity to review our financial results and the investor presentation, which was posted on the company's website and stock exchanges recently. I'm joined today by our CFO and Executive Director, Mr. Sanjeev Mason, and SGA, our Investor Relations Advisors. I'll start with a few words about the macroeconomic situation. Over the past year, the global and economic environment has been marked by a clear and concerning increase in volatility and slowing growth. As we moved into FY’25, rising geopolitical tensions and shifting policies have added to the uncertainty, with the global economy facing renewed pressure from such uncertainties, tariff and non-tariff barriers, and fast-changing alignments in the global financial and trade infrastructure. We see this transformation rather as an opportunity, and our strategies are now designed to meet the evolving market realities and expectations. Let me begin now with the watch component business. As many of you are aware, the Swiss watch industry has experienced a prolonged slowdown, largely driven by inventory situation which is being corrected, subdued consumer sentiment, and tightening discretionary spending across all major economies. The contraction in demand was heavily influenced by China and Hong Kong, which are among the largest markets for the watch business, where the market declined by 25.8% and nearly 19% respectively over the previous year. The total volume of watches exported by Switzerland declined by 9.4% or 1.6 million units. Export volumes were at a historic low of 15.3 million watches exported. The volume decline was witnessed in watches for all price points. While the export environment for Swiss watches remains challenging and consequently also for us, we are monitoring the situation closely and remain optimistic about the future. Based on current indicators and market feedback, we anticipate a gradual revival beginning in the second half of FY’26. At KDDL, we have responded strategically to these headwinds, which I may mention is not for the first time. We experienced something similar several years back in 15-16. We've responded to these by expanding our product offerings in mid to high value segments. This conscious pivot towards value-driven categories is showing encouraging traction. While overall export volumes have declined, our approach has enabled us to strengthen our relationships with existing clients and also to open opportunities for higher margin growth in new geographies. For example, we are actively exploring expanding our reach beyond the Swiss markets to other European countries to further enhance our export strategy. With 4 decades of delivering precision, consistency, and quality, KDDL is now well positioned to engage with a broader set of global watch brands. We are leveraging this reputation to explore and initiate relationships with emerging non-Swiss customers in various European and non-European countries where we see significant future promise. In the domestic market, the outlook remains strong and consistent. Demand visibility continues to be positive, supported by healthy consumer sentiment and strong order inflows across key product lines. Our volumes have remained robust, and we are seeing an encouraging rise in average realization. A combination of selective price adjustments and a focused premiumization strategy is driving this improvement. Our emphasis on value-added segments reinforces our position as a trusted partner in the domestic watch component ecosystem. The recent Indian rupee to Swiss franc currency fluctuations have been favorable for our company. The total revenue of our watch component business, comprising of watch hands and watch dials, declined by nearly 20% compared to the previous year, majorly due to a decline in export revenue by 28%, whereas the domestic market revenue grew by 13% during the year. Our precision engineering business, which I will discuss now, continues to demonstrate very healthy momentum, largely driven by a robust export demand and a consistent track record of exceeding customer expectations. We have fortified our already strong reputation in both the established and emerging international markets. I am pleased to share that in FY'25, we recorded a 55% year-on-year growth in revenue, taking our top line to 147 crore rupees. This solid performance reflects the strength of our business fundamentals and the trust that our global clients place in us. Importantly, the momentum remains strong and we are optimistic about our growth trajectory moving forward. In anticipation of future demand and to support our growth ambitions, we have secured a 28,000 square foot shed on lease in Bengaluru, not far from our existing facility. This new location, currently under development, will be operational in the second half of FY'26. We continue to focus on sectors that offer high entry barriers and long-term growth potential, like alternate energy, comprising of electrical vehicles and energy storage systems, aerospace, automotive, and electrical segments. These sectors not only allow us to align with our technical strengths, but also offer robust export opportunities. Exports, I may repeat, remain a central pillar of our growth strategy, and we are confident that our proactive approach will yield substantial benefit in the years ahead. Our bracelet division is integral to our export-driven strategy and continues to gain strategic importance within the group. Dedicated exclusively to the export market, this division reflects our commitment to building a globally competitive manufacturing footprint in the watch ecosystem. At present, the capacity utilization stands at about 50%, indicating substantial headroom for growth. With continuous improvements in operational efficiency and recovery of the market conditions, we anticipate capacity utilization rising to about 65% in FY'26. We are confident that this division will emerge as a key contributor to our export portfolio in the coming years. About our packaging division, this division continues to enhance revenue by adding new customers and segments. During the year, the revenue improved by 13% compared to the previous year. Our initial focus is mainly on the domestic market, where we see a robust demand and steady inflows of RFQs. In parallel, we are targeting international brands with a presence in India, offering premium packaging solutions tailored to their requirements in India. This enables us to meet their quality expectations while offering the advantages of a reliable domestic supply chain. While the business is still in its early stages, we are seeing promising traction. Export opportunities are also on our radar, and we are actively building capabilities and partnerships to support this next phase of growth in the immediate future. In conclusion, while FY'25 was a year of correction in some of our segments, KDDL stands at a strong and strategic inflection point. Each of our business divisions, be it watch components, precision engineering, bracelets, or packaging, is aligned with our long-term vision of sustainable, export-led, diversified, and profitable growth. As we step into the next phase of our journey, we remain confident of our ability to scale new heights and deliver greater value across customers and markets. In FY'26, we expect our revenue to grow in the range of 15 to 20%, majorly driven by recovery in the international watch market, growth of our precision engineering business, and enhancement in the utilization and growth of the bracelet and packaging businesses. I would now like to invite Mr. Sanjeev Mason to update you on the company's financial performance. Thank you.
Thank you, Mr. Sabu. Good morning, everyone. Let me take you through the company's standalone, first of all, the standalone financial performance. During the quarter 4, our revenue was 102.3 crores, and the overall for the year, the revenue was 384 crores, compared to the last year revenue of around 359 crores. EBITDA for quarter 4 stood at 19.4 crores with an EBITDA margin of 19%, while for FY'25 full year, the EBITDA was 88.5 crores and the EBITDA margin of 23.1%. PAT for the quarter 4 was at 8.2 crores, and for the full year FY'25, the PAT was at 49.2 crores. Profitability during the year, as already shared by Mr. Sabu, was majorly impacted due to shift in the product mix, the decline in the watch component export revenue, and the increase in the precision engineering business revenue. During the last year, financial year 25, we incurred a capex of around 30 crores, and in the coming year, we expect to do a further capex of around 35 crores. Moving to the consolidated financial performance, the total income for the quarter 4 FY'25 was at rupees 431 crores, and for the full year, it was rupees 1,695 crores. EBITDA for the quarter 4 at a consolidated level was 75.9 crores with an EBITDA margin of 17.6%, while for the full year FY'25, EBITDA was 307 crores with an EBITDA margin of 18.1%. PAT for quarter 4 was at rupees 31.6 crores, and for the full year at rupees 142.3 crores. With this, I open the floor for question and answers, and I request all the participants to kindly restrict the questions to the KDDL manufacturing business. As for the retail business, already a separate investor call is held where the detailed answers are given. With this, the floor is open for the question and answer.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Amit Ajicha with HG Hawa. Please go ahead.
Good morning, sir. Am I audible?
Good morning, Amit. Yes, you are.
Yeah, thank you for the opportunity, sir. Sir, can you share some visibility of revenue mix and order from the precision engineering segment?
Sorry, say that again. Amit, why don't you ask all your questions so we can answer them all at one go?
Okay. And sir, the second question was connected to precision engineering only. What are the EBITDA margins for the current year, and what are you planning the EBITDA margins for the precision segment for FY'26?
Can you just repeat your first question again?
Can you share the revenue mix and order book visibility from precision engineering business?
Okay, so these are your two questions?
Yes.
Okay. Sanjeev, let you answer them.
As we have already shared in the Mr. Sabu's speech that the revenue of precision engineering in the last year was 147 crore. And regarding the order position, in our earlier calls, we have given a long-term indication for the precision engineering business where the growth of business will, over the longer period, will be in the range of 25%. So we still maintain that. And accordingly, the order positions for getting that type of growth in the coming year is already there. Regarding the EBITDA margins, the EBITDA margins are in the range of 19-20%, and we expect that this type of margins will be maintained in the coming year.
Thank you for the reply, and I appreciate it, and thank you, and all the best for the future.
Thank you.
Thank you. Next question comes from the line of Vijaram, an individual investor. Please go ahead. Mr. Vijaram, please go ahead with the question.
Yeah. Hi, Mr. Sabu, can you hear me?
Yes, I can, Vijaram. Good morning.
Morning. And first of all, I've been an investor for a long time, so very well done, and love the way you're hedging your businesses in terms of managing all the downturn and everything else. I just had a question on Faber-Luber. I mean, I'm a shareholder in both EPOS and KDDL, but just want to know, where does Faber-Luber sit, and can you shed some light in terms of production of Faber-Luber and the plan for 26?
Right. Questions, Vijaram?
I'm sorry?
Are there any other questions? I'm just requesting if there are other questions. Okay.
No. And the second question, sorry. The second question is really around your guidance of 15-20%, just in terms of where does it stem from? I mean, you have mentioned the slowdown, and I think everyone gets that. Where is the confidence for the 15-20% coming from? If you could just shed some light. I know you did mention some of it in your opening speech. Thank you.
Okay. So let me answer the Faber-Luber question first. It's a slightly long answer, so I will request everyone to bear with us on this, right? So Faber-Luber is on the one hand a very strategic, new sort of business, but it's a business that we are pretty much familiar with. So Faber-Luber on the one hand requires knowledge about distribution and about watch brands, which we have in our subsidiary company EPOS. And the large part about launching a new brand with products in Swissmade is about being able to design and create products, components for it. Again, where on the back end we have a huge experience with dials, hands, which are, by the way, very important, because a lot of the creativity and the value of a premium watch comes, and dial hands and bracelets is a very important part of it. Watch cases is the part that we are not doing, but in future it's a strategy that we will make watch cases as well. So Faber-Luber really brings in the point where we are starting as a company to own a Swiss brand, and not only own it, but actually to be able to control both sides, and therefore the entire value chain, from manufacture of components eventually to manufacturing the watch and its distribution. Its distribution in India we are very familiar with. We will know and we will learn about distribution globally through the Silver City brand, which is establishing the global network for Faber-Luber. And over time, I just want to say, over time, look what it allows us to do. It allows us to understand and learn fully the entire value addition chain of a watch brand, of a Swiss watch brand. And this puts us in the same sort of league as many of the other groups in Switzerland, in the Swiss watch industry, which are verticalized. Richemont Group is one of them, and similarly. So, they understand the distribution, they understand the manufacturing, the back end, and we are on the way to do that. And what this means is, obviously, once Faber-Luber is established and we understand the various edges of it, it gives us the opportunity to expand the brand mix, perhaps for a higher end brand, perhaps for a lower priced brand than Faber-Luber. So it's the start of a very, very exciting and a very, let's say, a story with a great potential going forward. It's not going to happen overnight. It will take its time. But to create anything meaningful, it needs time, because we don't want to do it superficially. We want to, like everything we do, we want to get to the root of it and do something that really adds value. So these are just a few, thoughts about what is the underlying strategy of Faber-Luber. Right? Now, how is it going? Great. There's a great response. Distribution has started in India. It has been launched. We are actually falling short of the product. So I think there was an underestimation of the kind of response the market would give. So in India, we are doing very well. We are actually rushing to establish, to shore up the supply chain. For Swiss watches, it's somewhat of a long process. because the quality and the design requirements require that time. You can't really take off things off the shelf and put it together, right? It's not like a quartz watch which you just put together in a kit. Everything has to be designed, it has to work perfectly, and it has to work perfectly for 20 years, right? But it's happening. You're going to see a lot of Faber Luba in India and everywhere in the world in the coming 12 to 18 months. And I think our plans are extremely robust for Faber Luba. I don't know if that answers your question, but if there's anything more specific, I'm glad to answer that. As far as the guidance of 15 to 20% is concerned, a lot of it, not a lot of it, but one part of it, of course, depends on when and how the international watch market revives. I think we are probably close to the bottom, and therefore our anticipation that in the second half of this year things will start to look up. It's not going to bounce back like very, very strongly, but it's going to be a clear and a definite sort of recovery. That said, we are already, as I mentioned in my earlier remarks, we are already sort of working on expanding our offering to some geographies that are not as impacted as the Swiss watch market. For example, the German, the emerging watchmaking in Germany, in Scandinavia, and some other interesting geographies. These will be small compared to the Swiss market, but nevertheless, these are hedges. And you are right. One of our underlying strategies has been to be able to hedge risks. In every business, there will be a downturn from time to time. There will be some risks, but our strategy and our skill as managers and as leaders of a business lies in being able to understand that this will happen. And when this happens, are we hedged? Are we flexible to be able to not only ride this downturn, but actually come out stronger? So I believe 15 to 20% is a good range. If things recover quickly as expected, we'll be closer to 20%. If they're a little bit delayed, they'll be closer to 15%, but that's pretty much the range that we can give at this moment.
I would like to add into this that, as you may be remembering, in the previous year, our bracelet business and the packaging business started in the second half of the financial year. So this year, the full impact and the revenue of that will be there. Plus, there is an increase and the enhancement in the capacity utilizations of both these businesses.
Great. Thank you. I just had one other question around Faber Luba. In terms of economic interest, how does it split? So, if Faber Luba is to sell in India now, obviously there's a distribution with Ethos. But in terms of economic interest, how much flows to KDDL as a company?
Well, the distribution in India is Faber Luba has a contract with Ethos as an exclusive distribution arrangement. So that is that. Otherwise, Faber Luba as a company under the Silver City brand is managed by the Swiss team who are doing a fabulous job. And as you know, KDDL owns a majority and Ethos has a minority position in that, minority shareholding.
Got it. So any profit that Faber Luba will...
Sorry?
So all the profit that is earned by Faber Luba will obviously, to the extent of shareholding of KDDL, will come into KDDL India this year's books.
Yes, on a consolidation level, that's right.
Perfect. Super. That's really good again, Mr. Sabu. Thank you very much for your clarity and all the very best.
Thank you. Thank you, Vishnu.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Rohit Mehra with SK Securities. Please Mr. Mehra, please go ahead with the question.
Yeah. Hi, sir. Thank you for the opportunity. My question is, what kind of demand trends and customer responses are you seeing in the domestic and international packaging business?
Okay, any other question?
Just follow-up question that what is our long-term vision in terms of revenue in this segment?
Sorry, revenue in this segment?
Yes, yes.
In the packaging segment. Okay. Good. Yeah. Is that all? These are the two questions? Great.
Yeah, that's
in the, let's say, packaging or luxury packaging, which is the segment that we are focusing on, there is a robust demand coming from, of course, the main part of it is from the watch segment, There's the jewelry segment, and I don't have to tell you where branded jewelry is going in India and abroad. So we are seeing a very strong demand. Sorry for the disruption. Rohit, I was going to answer your question. So as I was saying, there is a robust demand from the watch, jewelry and other segments in the luxury packaging. And at an international level too, there is the demand. As I had mentioned in my speech, there are many brands, international brands, that are now selling in India. And many of them are still bringing their packaging from the Far East to China or wherever. And obviously it makes a lot of sense where certain volumes have already developed in India to actually procure the packaging in India. You save a lot of money and it's cheaper and it's of course a lot less logistics involved. And this is a market that we are getting a great response from. Of course, we have to meet their design, quality and all their homologation and ESG conditions. So that is happening, but we are seeing the impact of that, and you'll see the impact of that in the numbers this year. The revenue numbers, again, we are looking at growth upward of 20% CAGR, and I think this is sustainable for a good 5 to 10 years in the future anyways, because we see currently a great demand in India from domestic and international brands, but also direct export to Europe as well as to the Middle East. Remember that there's a huge jewelry market or a market for branded jewelry in the Middle East, and almost all of them are importing all their packaging from China. And our goal is to actually take a share of the market from them. Can you hear me?
Thank you. Next question comes on the line of Devanshu Bansal with MK Global. Please go ahead.
Hi, sir.
Devanshu.
Good morning, sir. Hi. Sir, you've provided a 15 to 20% growth outlook for FY'26. And whatever I understand is that the revenue mix shall shift towards categories like bracelet, precision engineering and packaging. Given this changed revenue mix, what is the margin expectation for FY'26? That is question number one. Second is on Silver City brands. In FY'25, what is the exit run rate of some of the operational loss as of now, and what is the expectation of this loss in FY'26 for complete year? And last question again on Silver City, any capex investment that we plan to do within that subsidiary in FY'26? These are my three questions, sir.
Okay, I'll let Sanjeev answer the question on the margin expectations. Let me answer first the questions relating to Silver City brand. There is no major capex planned in Silver City in this year. And in terms of loss, I think on FY'25 we were below the budgeted loss. Remember that in FY'25 there was a delay in the launch, so we were not able to deliver the product. I had mentioned that challenges in developing the supply chain fast enough, but after March it has started coming. So I think our numbers for this year will pretty much be on target. We are actually trying to do better than what we budgeted. There will still be a loss for sure. I'm not able to quantify the loss exactly, but it is as planned. It's part, to be honest, there will be a loss this year and there will be a diminished loss next year, but that's part of building a brand globally. And I think from FY'28 onwards we'll start to the loss will disappear, but it is as per budget, and I'll have to check with Silver City exactly what is the loss, but it's meant to be smaller than the loss that was originally budgeted.
This is encouraging. Any specific market apart from India that we are targeting from Silver City in the next 2 years, per se?
A lot of markets. So a lot of markets we are targeting. I mean, of course, India will be an important market, obviously, because we know this market the best as a group. But a lot of markets are being targeted, and a lot of markets have already been signed up, and products are there. So I think Japan, it is there. In the UK, we are in discussions. In Italy, it has been signed up. In the Middle East, there has been a sign-up. So there have been a lot of sign-ups already in products. And we will see. As I said, we underestimated the kind of market response that there would be. So now for the products as they are coming in, there's a bit of a struggle as to who's going to get the products, because Ethos obviously wants the products because the sellout is extremely good. But we've also got now the whole international structure. We've exposed the brand to retailers and they want it as well. So actually the real effort right now is to get more product online as soon as possible.
Understood. And on the margin expectations?
Would you like to offer on the margin expectations?
Devanshu, regarding your question of the margin expectations for the coming year, the last year our EBITDA margins was around 23%, and with the growth estimated in the range of 15 to 20% and majorly driven by the precision engineering, recovery into the watch component business as well as the bracelet and the packaging business, we expect the EBITDA margins to remain broadly in the similar range in the coming years.
Very clear. Sir, can I have one follow-up question on Silver City, if you allow?
Sure.
Yes.
Sir, also wanted to understand the current price positioning of the brand launch. As of now, what is the price band that we have launched? In which category of luxury watch the new models have been launched? So these are the two questions that I have.
That's a great question. And, basically to answer it simply, it's in the price point of 2,000 to 4,000 Swiss francs, 2,000, let's say dollars, okay, 2,000 to $4,500. This is the price range in which we have launched it. Right? This is below Tag Heuer. This is around the same price range as Oris or something like that, right? Now, if you know the brands, you know what I'm talking about. What is interesting is not only to compare the price. What is interesting is to compare what Power Luba is delivering at this price. What is the movement? We are delivering a La Joux-Perret movement for watch lovers. That is like, you have a fabulous movement, whereas every competitor has not an inferior movement. None of the movements are inferior, but in terms of specifications, they are not as good as La Joux-Perret movements. In terms of the case design, see-through back, a plated, a machined or an engraved rotor, a customized rotor, right? Customized crowns, a fantastic, designed and executed products in dials, hands, cases. So if you do a like-to-like comparison, what we are offering for, let's say, 4,000 francs, most competitive brands, you will find that between 5,000 and 6,000 francs. So like-to-like comparison on a brand, when you do quality and specifications, we are 20 to 25% cheaper than most other Swiss brands in this category. So, and that has been commented upon by all international media. Great value for money, great quality, and that's the reason why we are getting this great response.
Very encouraging to hear, sir. I totally agree. Product value proposition is a very key point in terms of gaining traction, and we are seeing very good examples of such brands doing very well in India as well. So thanks for taking my questions. But this is really good.
Thank you. Thank you.
Thank you. Next question comes from the line of Rishi Maheshwari with Aksa Capital. Please go ahead.
Hi. Thanks for taking my question. This is very heartening to know your optimism given the opening remarks of, a slight back-ended recovery. So my question was related to understanding the precision engineering division. While you mentioned, while the 15-20% growth is also a result of the bracelet division accentuating their growth in this year versus only half of last year. So is the precision engineering also expected to grow at about 15 to 20%? And if yes, help us understand what are the areas of growth, given that the other, in auto ancillary, for instance, we are not, other companies are not showing as much optimism as perhaps you are showing, or other divisions, if you can throw some light on. My second question is on certain numbers that you had earlier given in earlier calls. The bracelet manufacturing division had a capacity of 75,000 bracelets. Are we looking to enhance it, given that you're saying next year you will be closer to higher utilization? And the third part was to understand on the packaging. This had a capacity of 100,000 units as well, as far as I understand goes. So if there is, given the heightened growth that you're looking over there, is there any reason to believe that there is capacity enhancement that you're looking at it? Thank you.
Okay, I'll answer the last two questions and then invite Sanjeev to answer the first one on the overall growth. I think in capacity of bracelets, it's right, it's 75,000, but there are plans to enhance it using some balancing equipment. But it's important to understand that it also depends on the product mix a lot, right? So if you have simple bracelets or simpler bracelets, this you could easily make 90,000 or 100,000. For the kind of bracelet that we have currently, it's probably closer to 90,000 than 75,000, right? But there is a plan to enhance it probably by the end of this fiscal year. And we expect that the capacity utilization will go to about 65% of this 90,000. The packaging unit, I'm not sure if we have a capacity of 100, but it's much more than 100,000. Sorry?
New unit.
The new unit. Only the new unit, yes. So the new unit has been established, which came into production, I think, in October. And here, I think we will get also close to 60 or 70% capacity utilization during this year. And that is going to help in of course, contributing to the overall growth.
Rishi, basically in this type of business, either precision engineering or packaging or bracelet, it's not a question of capacity creation and the adding of the capex. Mainly it is a question of how we are able to satisfy the customers, bring the product range to their quality certifications and the sustainability of the product. So this is a long process. Similarly in the packaging, as we have recently put up this capacity, once we reach to the near to the capacity levels, the new customers and the new product range, then we will think of another round of the capacity increase. Regarding the precision engineering business, you have asked whether there also the growth will be in the range of 15 to 20%. Our expectations are there that it will be more than that.
Very encouraging. If I can just briefly ask one more on the bracelet. Now, how many customers do we have in the bracelet division?
In the bracelet division?
Yes.
If you've been part of earlier calls, you know that the bracelet division was set up in collaboration with one customer who supported us to set up. And right now we have that customer. We have that one customer. As our production expands, we are free to go to other customers, provided this one customer to meet or we produce more than the needs of this customer, which could happen this year, but let's see how much this customer will actually lift. So I believe in the years to come, we will work with multiple customers. This year, we will be mostly with this one customer or some other customers of the same group, because this customer is part of a large group, the LVMH group, and they have more brands than just one, and they are also looking at starting to buy from us.
Wonderful. The last question would be on Pebble. In a small conference that you held earlier, you mentioned that your aspiration to go there is about 100,000 units per annum. That is the kind of aspiration at some point in time. Does that aspiration still hold given the early demand trends that you've seen? You've spoken very highly.
Absolutely.
Any indicative timeline do you think that is possible by, say, FY'30 or so?
That's hard. That's hard to say. But, I also don't want to say, it's going to be in the distant future. So, FY'40, no. We're going to do it fast. But, building a global brand, it's hard to predict, very precise timelines. 2 years from now, we should be able to predict that more accurately. I think a lot will depend on how long it takes us to get to 10,000.
Right. Absolutely. No, all the best. Great wishes for you. Thank you.
Thank you.
Thank you. Next question comes from the line of Ajay Surya with Niveshaay. Please go ahead.
Thank you for the opportunity and congratulations on the performance despite the overall environment, and the commentary is really positive. I have a few set of questions. Sir, if I look at our business mix, so last year precision was around 25% and this year it has increased to about 40%. And margin profile, as you mentioned, that in the precision segment is a bit lower than the watch division. And if I look at our gross margins have declined significantly this quarter. So I wanted to understand the reason behind this, and is it kind of a one-off, or just wanted to know more on that. Second question is, sir, second question is, sir, in the watch component division as well, the watch bracelet division has been increasing and it has started to contribute from this year itself. From the data which we have even to gather internally, we are providing, I guess, 2 SKUs in the watch bracelet. But the pricing which we get, there is a stark difference of maybe a 10 times difference in the 2 SKUs which we provide. And in the recent quarters, maybe the lower price band has been of much more volume. So just wanted to understand more on this part, like how many SKUs going forward are we planning to do, and what price band are we targeting? Next question is, sir, in the opening commentary, you mentioned that we are also now moving to maybe non-Swiss geographies and the Europe or the other part of the world. So wanted to understand, like, if you can highlight how is the watch industry overall progressing? Like, is it moving away from the Swiss watches, or is it losing its charm, or is it that newer geographies have higher growth, which is why KDDL standalone business is targeting that segment? And someone last question on the precision engineering, the way we have grown over the years is quite robust, and we are expanding further in this, and if I get the amount right, close to 35 crores. So wanted to understand, have we cracked any new customer or new segment under this, like maybe the aerospace or the automobile side? Because again, is it like one single customer is driving this division for us as of now? So just wanted to know your thoughts. Is there any risk of customer concentration on this?
Right, we got that, Ajay. Ajay, we got that. I'll answer your 2 questions and then I'm going to let Sanjeev answer the first and the fourth. Bracelet data, I think you are misreading the data. There are SKUs. I think there's lower value SKU that you're talking about is probably a component of the bracelet. The bracelet consists of the main bracelet, of 2 end pieces. Those are end pieces that link to the watch case. And then there is a buckle. So they are shown as separate SKUs, but eventually they all get together to form one bracelet. Right? So I don't think you can come back and say, there's more volume of lower price and so on. In the very early stages, we were not providing the buckle. The buckle was provided by the customer. Now we are providing the buckle as well and the end pieces, and therefore you see this. But eventually they all, get into one sort of bracelet. Currently we are doing 3 models of bracelets. But this is going to grow, of course. It depends on what the customer wants right now. So as I said, we are right now dealing with one customer, but these will grow. So I hope that clarifies the question about SKUs and pricing. Now there's not that much difference in prices, but on the bracelets, when you take it as a overall one set, which comprises one bracelet. Second point was about watch markets in other countries. It's not that Switzerland is declining. Other countries, there are some brands and some watchmakers who also now are coming up. Remember that the watchmaking tradition, it was not exclusive to Switzerland. Watchmaking tradition started in UK. Watchmaking as a history, it started in UK and France, and then it spread to Switzerland, it spread to Germany, and it spread to Scandinavia. So these countries are now reviving some of their watchmaking traditions. And of course, don't forget Japan. Japan always had a watchmaking tradition, and that is also reviving, and from Japan it's going to some other countries. USA, by the way, had a strong watchmaking business in the 20s and 30s. And some of the brands are also now reviving in USA. And obviously now the Make America Great Again is a fillip to some US brands. So that is what is happening on the watch market. Switzerland still remains by far the most important and the most valuable market for luxury and premium watches. Sanjeev, the other two questions you can answer.
Ajit, regarding your question of lower margins in the quarter 4 of the financial year 25, yes, to some extent you have rightly captured that the precision engineering business revenue in the previous quarter was around 40%. That is one reason of lower margins at the overall level. Number 2, in the quarter 4, the watch component business revenue is broadly in the range of 50%. The other revenue is from the bracelet and the packaging business, which are at a nascent stages of the ramp up, where the costs are there, and there also the margins are lower. As we move up in the coming quarters, this recovery and the normalization will be there, and the EBITDA margins which you have seen in the quarter 4 are like a one-off cases. You will see the improvement over there. Number 2, at the year end, there are some one-off expenses which are accounted only at the year end. Regarding your question of the new customers being added into the precision engineering business, yes, this is part and parcel of the business. We keep adding new customers, new segments, new geographies. I think it is not dependent only on one customer. Yes, at some point of time, some customers have a larger share or the larger revenue for the business. So, but I will not be in a position to disclose the names of the customers, but we keep adding the new customers from the different geographies.
Got it, sir. Thanks for answering all the questions in detail. All the very best for future.
Thank you. Next question comes from the line of Jagdish Topo with Japa Investment Advisors LLP. Please go ahead.
Yeah, good morning, sir. Thank you for this opportunity. I would also, refer to your presentation in December 24 on business outlook. So my first question would be, back then you had stated that China one is positive but waning. Now we are in May, so much has happened in between in terms of trade tussle and all. So what's the outlook? Is China plus one still remains positive, or it's become stronger, or still waning? So that's question number 1. And you also mentioned, America is also, wanting to invest in their watchmaking industry. So in that context, if you could explain a little bit with a little bit more color. Now my question number 2 is, if I refer to your slide, in your presentation of the business outlook, there are, I guess, 4 market segments were mentioned, and 3 main product group were mentioned. Now, in the segment, along with aerospace, it's mentioned defense as well, and in EE it is mentioned electrical and electronics as well. I would not like to go to the product group as of now, but I would like to know, out of these 4 segment, which were the segment that outperformed this year and contributed to the most in terms of the revenue in that particular segment, engineering segment, and which are the segment also you look the most promising outlook for the next few years.
Okay.
So third is basically, suggestion. You had recommended that if somebody wants to visit your factory, they are welcome. So I would also like to visit along with some of the analysts. If you could suggest when it can be arranged, and what's the the process for the same. Thank you so much, and best luck to you.
Thank you. Thank you, Jagdish. Yes, we will organize a visit to our factories. We very much like to welcome analysts, shareholders. I think it's important to understand the business, and it makes the whole interaction much more meaningful. So we will plan that with SGA, and I'm sure they will get in touch with you. Regarding the segments of the business of precision engineering, Sanjeev will answer that. China plus one, this is not a situation that changes every quarter or every 6 months like that, right? China plus one is a reality. Now suddenly it has become, because of the Trump policies and so on, it has become hot again. Tomorrow there may be a deal between China and America. It will cool down again. So we can't really go on a quarterly basis. I think in general, businesses across the world are realizing that over-dependence on any one geography, in this case China, is a situation that should be de-risked, and therefore they are looking at alternatives to China. Is India an alternative? Of course it is. And therefore, if India can come up to the mark, China plus one is a reality, and it will continue. We are already seeing the traction of that. However, if India come up, for whatever reason, we are too slow, business is not, for whatever reason, the technology is not coming fast enough, we are too slow, we are not able to put fast enough, approvals take too much time, whatever be the reason, I'm not going into that, other countries will take it up. And my sense is that there are other countries who are taking it up. For example, Vietnam is spoken about, and other Southeast Asian countries, there are also Eastern European countries. However, India has a great opportunity, but we have to move fast to do that. We are trying our best to do that. That's as far as that answer is concerned. Please, Sanjeev.
Jagdishwar, you asked about in the precision engineering business, the different segments where we have the presence, that which segments contributed to the major growth in the previous year. In the last couple of years, the major traction has been from the alternate energy segment, which comprises the EV and the battery energy storage system. And that continued in the previous year also, the strong growth and the order position was there. Coupled with that, the aerospace, which post-COVID for some period, for a couple of years, it was on a downturn and the slowdown was there. That also witnessed a decent recovery. And the second segment is from the aerospace industry.
Thank you.
Thank you so much. Thank you.
Thank you. Next question comes from the line of Mehul Panjwani with 40 cents. Please go ahead.
Thank you so much, sir, for the opportunity. These are my questions. Am I audible, sir?
Yes, you are.
Okay. These are my questions, sir. I am new in tracking our company, so just would like some clarity on some very trivial questions. One is, how much is the jewelry segment contributing, if at all, to the revenue of the company? That is one. Secondly, what are the Silver City brands? Is it just the Faber-Luba, or is there any other products which are being added to that subsidiary? And third is that, sir, whatever I heard in the conference call, I can understand that we are in a very niche business. But if I would like to understand how many competitors would we have which are based out of India. Thank you so much.
We are in different businesses, Mehul. So it's hard to say how many competitors. We have competitors in various businesses, and frankly, I don't differentiate competitors in India or competitors abroad. Today, 80% of our business is coming from export, and therefore we look at international competition, and their competition is a reality. In all our businesses, we have competition, and we are able to grow faster than the competition because somewhere we are better than them. So it's hard to answer your question about number of competitors. As far as Silver City brand is concerned, at the moment we have only one brand, that is Faber-Luba. In future, there is a plan to add brand, but as of now, there is nothing specific, so I cannot comment on that. And as far as jewelry is concerned, in our company, we are not really manufacturing anything for jewelry except packaging. And packaging at the moment, the jewelry segment is small for us. The main segments are outside jewelry, but it will be one of the fastest growing segments in the years to come based on the kind of responses that we are getting from jewelry companies in India and globally.
Right. Sir, one follow-up question. So in terms of the watch components, because I think that is one of the very niche areas of your business. So for that, I would rephrase my question. How many competitors would be there globally?
There are a lot. And again, remember that we are making several components. Not every watch component maker makes so many components as we do. There are dial makers, there are hands makers. In dial makers, I could easily say there are probably 15 to 20 well-established dial makers in Switzerland, in Europe, in Japan, in China, in Thailand, and of course we are in India. Hands makers, there are fewer, maybe 6 or 7 in the world. And on bracelets, again, there are plenty of. So.
Right. Sir, I'm very quite curious about the pedigree of our company, because we are to my little knowledge, you are in a very highly niche and precision oriented component manufacturing. So how did we get into this kind of a business mode? I mean, I know that our company is quite old, but
Mehul, I don't think we can answer that question on a earnings call. I mean, that's something. There's a lot of information on our website, and that's the history of 40 years. It's hard to sort of summarize that over a 2 or 3 minute. But why don't you next time a one-on-one group meet, not one-on-one, but a group meeting at one of our factories? Why don't you join in for that, and you can get a better sense of 40 years of the company.
Definitely, sir. Thank you so much. Just one last
Thank
question,
you.
if I can just chip in one last question. So, what is the reason for having Bangalore as the production? I mean, for all the factories after we have had in Chandigarh, what made us move to Bangalore? I mean, why was it? Because anyway you are exporting.
Bangalore is not a move to Bangalore. Bangalore has been one of our bases for more than 30 years. So it's not a recent move.
Okay, sir. Thank you.
It's a diversified strategy. We didn't want to put everything in one region.
Right. So was it because of some labor benefits, or we moved to Bangalore?
Again, I'm saying there's no question of move. We've been in Bangalore for more than 30 years, and we've been in existence for 40 years. So again, I'm saying that we believe in de-risking and hedging our bets, and one of them is not putting all your manufacturing in one location.
Right, agreed, sir. But since we were primarily
Mehul, I can't answer more.
Sorry, sir. Thank you so much.
I don't remember what was the reason, but the basic philosophy is to hedge against risk and to diversify.
I appreciate, sir. Thank you so much. Yeah. Thank you.
Thank you.
Thank you. Ladies and gentlemen, due to time constraints, we have reached the end of question and answer session. I would now like to hand the conference over to the management for closing comments.
Thank you, everyone. If you need any further clarifications or any questions, please contact the SGA team, our investor relations advisors, and we'll be happy to connect and answer what we can. Thank you once again for joining in this earnings call. Thank you, everybody.
Thank you. On behalf of KDDL Ltd, that concludes this conference. Thank you for joining us. You may now disconnect your lines.